Congratulations! Your loan is conditionally approved. A SunWest loan originator is always on top of her approvals, no matter where she is. Break free with Morgan.
Welcome to The Interest. I'm Mike Savino. Many brokers are predicting that non-banks will continue dominating the market this year, but others say banks may win. Our own Christine Stewart talked with some of the top leaders in the industry to get their take.
Because there's so many loan officers converting over from retail into the wholesale channel.
Mike Cordes, CEO of Nexa Mortgage, says it's the migration of loan officers from retail to wholesale that's really exciting. People in the industry are talking about how 2023 is the year of the broker, but that could depend on the channel. He says correspondent loan officers don't always do well in wholesale because they have to generate their own leads.
They might not even have a place in the industry for a period of time until the refinance market comes back, because purchase-driven business is always going to be at relationships.
Shashank Shaker, founder and CEO of InstaMortgage, doesn't necessarily share Cordes' laser focus on the wholesale channel.
There is pros and cons of both the broker and the banker side of it.
Pricing is better on the broker side because you get to work with multiple lenders. But on the banking side, you get better support from underwriters. You also have in-house closings and funding.
How do I get the best of the banking world and the best of the broker world and build a company that's really built for loan officers? And that's where the hybrid model comes.
Cordes says Nexa has 196 investors, all with different products. He says rates are getting all the attention at the moment, but that's not what MLOs should be focused on.
Unfortunately, most people do leave because of rates, but that's not the number one reason they should be leaving. The number one reason they should be leaving is because of products.
Shaker says most companies remain just broker or banker because it's easier from an operations standpoint, but he likes to marry the best of both worlds.
Better pricing, more product, maybe newer products that come in, maybe slightly lower cost of production, but then the benefit of all the in-house underwriting and in-house support.
He says his loan officers really like this hybrid approach, but Cordes is firmly in the broker camp.
The loan officers who are able to get to more transactions, utilizing technology, putting themselves out there, those are the ones who are going to get the deal. But there are just some loan officers who are not willing to do those things and to open up to new things that are just not going to make it.
Cordes says those independent, self-producing loan officers are key right now.
Because we're working 3 times as hard for half the money right now. And that's okay, right? But those of us who are willing to do that are going to earn our way into 2024 and 2025 when the markets come back. The markets will reward us at that time.
Reporting for The Interest, I'm Christine Stewart.
Thanks, Christine. We've been getting some positive news with purchase applications on the rise over the last month, but that's also what sellers want to see, and home prices are on the rise once again. Black Knight says prices rose in February, breaking a 7-month streak of declines. The increase was also the biggest gain that we've seen since May of last year, as prices rose in more than 3/4 of the top 50 markets. On a more positive note for home buyers, the annual growth rate continues to cool, even with prices going up in January. Home prices are up just 1.94% for the year. It's the first time that the growth rate has fallen below 2% since early 2012. Coming up, lawsuits over non-compete clauses continue to pour in, and federal regulators want to do something about it.
Tired of turndowns and wasting 25 basis points or more on slow and manual loan processing? Divorce your processor and break free with Morgan Chat AI. There are no bad deals or tough loans, only deserving families that need AI-driven fast and accurate service. We treat every client fairly and with empathy. AI that understands how you feel.
I am Morgan. I get you.
Welcome back. Maryland-based NFM Lending is suing 2 former employees who left for U Mortgage. NFM says in a federal lawsuit filed last week that the 2 brokers agreed to non-compete clauses as part of their contracts, but they went and worked for U Mortgage immediately after leaving NFM last year. The company also claims that the 2 loan officers are using confidential information, including customer information that they got from NFM. The company is seeking an unspecified monetary damages, and they also want a judge to enforce the non-compete agreements. U Mortgage is not named in this complaint, but they are named in a lawsuit from Motto Franchising. Motto claims that UMortgage unlawfully recruited away the controlling member of TRB Solutions, a Motto Mortgage franchise. Motto claims this is illegal because UMortgage knew the TRB Solutions was subject of a franchise agreement. UMortgage even paid TRB's fee to end the agreement. Motto wants monetary damages and a judge's order that UMortgage not recruit away any other franchises. Now, earlier this year, the Federal Trade Commission proposed a ban on non-compete clauses. The FTC estimates some 30 million people are impacted by these non-competes, and a ban would increase their earnings by a combined $300 million. The agency says non-compete agreements are an unfair form of competition. The public comment period on this proposal lasts until April 19th. After the break, a top fintech company is growing its mortgage business.
Network with more than 2,000 attendees in Irvine for the California Mortgage Expo, May 3rd and 4th. From San Diego to LA to San Francisco, no one does it like we do. Sign up now at camortgageexpo.com.
Welcome back. Here's what else is interesting today. In the quest for world domination over the fintech industry, SoFi expanded its footprint in mortgage this week when it acquired Wyndham Capital Mortgage in an all-cash transaction. The move puts it on a collision course with Rocket Companies, which has said it wants to be the Amazon of consumer finance. However, some analysts say SoFi, which is a bank, might be better positioned, and now it's expanding its mortgage footprint. SoFi says the acquisition of Wyndham will allow them to scale and keep pace with accelerated growth. The company declined to say how much it spent on the transaction. For more on these and all of today's top stories, go to nationalmortgageprofessional.com.